On April 8, 2026, the Nifty moved 873 points, a 3.8% increase that crossed key structural thresholds. Public reports attribute this volatility to the U.S.-Iran ceasefire news that circulated after the fact. When we remove the news overlay, we find a mathematical sequence that categorized this move as positive well before the public narrative formed. Tracking predetermined mechanical rules allows for identification of these signals, whereas reacting to the news cycle leads to decisions based on late-arriving data. A chronological audit of the trading day reveals a significant disconnect between market action and the news cycle. This timeline shows the 9:15 a.m. lock. The system recorded a positive directional bias at the opening bell. The ceasefire news did not reach peak volume until 1 p.m., nearly 4 hours after the directional trajectory was set. The data shows that the market trajectory was secured at the open, making it impossible for the late-day ceasefire news to be the primary cause. As the Nifty intersected the 24,000 level, it hit specific data frequencies within the celestial gearbox. The acceleration at this threshold was driven by the Jupiter push and the key moon chain, calculation variables that govern upward force. During this phase, the Lord of Nakshatra functioned as the system governor, regulating the pace and velocity of the price movement. These preset thresholds dictated the breach of the 24,000 barrier, operating independently of sudden changes in human sentiment. High volumes of external geopolitical data often obscure the underlying trajectory for most market participants. To manage this, the 5-failed rule acts as a filter, auditing data to remove external anomalies. By stripping away the ceasefire noise, the system isolated a stable positive signal. Auditing the environment to remove nariad interference is the technical requirement for identifying the directional reality of the market. The evidence shows that the mechanical movement precedes the news cycle. The headlines are a trailing reflection of the underlying math. Relying on these trailing reflections results in lagging execution and missed thresholds. Accessing the frequencies that drive these market mechanics requires the use of the MAPS engine.